Okay, everybody, it's me, Gregory Mannarino. It is Wednesday, August 4th, 2021. I am going to start off with the economic news that we got this morning. And this was even a shock to me. We got this ADP private payrolls jobs number for the month of July. All right, we all understand that our economy is in collapse mode, but this number was epic. Epic. So for the month of July, apparently, we added 330,000 jobs. The number expected was 653,000. I mean, you want to talk about an abysmal miss? And then again, tomorrow we're going to hear for the prior week, first-time unemployment claims. And every single week, it's 400,000. Look, I don't know what other proof you may need. If you are a skeptic that our economy is in free fall, well, here you go. Here's another one that's in your face. It's out of control. I'll be honest with you. I expected this number to be bad, truly, but I didn't expect it to be this bad. This even shocked me this morning, and you know how I feel. I've been explaining to you for the longest time that this is just an economic meltdown, and that's exactly what this is. Anyway, so on the back of that, let's talk. So yesterday, we all know, S&P 500, new record high, rally across the board. Today, right now, stock futures are pointing towards a lower open. Triple-digit loss for the Dow, S&P's coming down, NASDAQ lower. Okay, that's all well and good. But why? What's going on here now? If you follow this blog, you know exactly what's going on here. Are you looking at the 10-year yield? Continues to nosedive. Okay, so what does that mean? Cash making its way into the debt market. So you would expect the cash to move from equities into the debt market, and that's what's going on here. It's 1.14. That's pretty astonishing. I would not be surprised at all to see this 10-year yield drop further. The entire yield curve, people, is coming down. Like I've explained to you, this is a clear sign. If you want to look at an indicator throughout history that's proven to be accurate, well, look at the yield curve. Okay, if it's flattening out, it's pointing towards an economy that's in a lot of trouble. Henceforth, the jobs number we got today, all the other economic news that we continue to get round after round of bad economic news, again, we're in collapse. We are in collapse mode. So we got this 10-year yield coming down. We got crude oil under pressure. You know how this works. If you have a 10-year yield dropping, crude oil under pressure, that's two factors of the four that we need to watch, which point to the direction of the market. You need crude oil being propped up. You need the 10-year yield stable, in this case coming higher, going higher. You need the dollar weaker and the Fed's balance sheet, which will continue to hyperinflate, just like it's doing. It still is doing that now. So we got two factors right now that are not looking good for the market. And henceforth, why stock futures are lower. Very, very, very simple dynamics to look at. I have this all set up for you on my website, traderschoice.net, so you can follow all these things. Right now, the dollar is weaker, okay, despite the fact that we got this cratering 10-year yield. What is this all about? This is about, again, more liquidity for the market. The Fed is on a binge, beyond a binge, to buy it all, issue debt, buy it back through another door. There's no end to this in sight. Massive, really massive inflation, and they're talking about it again this morning on Bloomberg. But it's contained. You remember the Fed chair said, "Oh, it's not widespread, so I'm not concerned about it." You got to be kidding me. I'm still waiting for the freak show known as Congress. One member of Congress, just one, okay, to call the freak from the Fed in here, the Fed chair, Yellowstein, and ask him a couple of damn questions like I covered yesterday. Oh, really? So is inflation really contained? Explain that, sir. And the other one is, why is the Fed issuing debt through one door, buying it back through another door, a mechanism which is massively inflationary? Why is this going on if we're booming? Can you believe the narrative. We're booming. Our economy is booming. After the jobs number today, I mean, if you need any more proof, there it is. We are not booming. It's an abysmal, horrid mess. Let's move forward here. Cryptocurrencies right now are flat to slightly higher. Gold and silver are doing well today. Gold is up about 0.8%. Silver's up over 1%. Look, it doesn't matter what these assets do, gold and silver. There's no price discovery mechanism whatsoever, okay? They are being artificially suppressed. We know who's doing it. Everybody knows. It's no secret. The Commodities Exchange knows who's doing it. It's JP Morgan. It's JP Morgan who's rigging the price of precious metals via the derivative. So let them continue to do that. This presents opportunity, people, for you and I. Okay, if they want to do that, that's fine. We jump in here. Like I said yesterday, you must start taking action and betting against the debt hyperbubble. And you do that by holding a hard asset here. Okay, gold, more importantly, silver. You understand? Okay. I still think cryptos need to be in your portfolio, people. I really, really do. You know, a lot of people ask me this question. It's like, Greg, when the meltdown in the market happens, and it will, and this will be, again, by design at a point of their choosing here, we're going to get a massive sell-off in the debt market. Okay, right now we're seeing the 10-year yield drop. It's pretty astonishing. Okay, that's going to flip around. When people, investors understand, nations around the world, why am I holding debt, U.S. debt here, that's guaranteed to cause me to lose money? There's no rate of return here whatsoever. Once we get a big sell-off there, okay, that's going to put a lot of pressure on the stock market. Cash is going to leave the debt market, leave the stock market like you cannot possibly believe. The stock market is going to crater. All right. As that occurs, cash is just going to look for places to go. It's not going to just go to money heaven. You understand? In my view, it's going in commodities, and yes, I think it's going to cryptos too. So these are the spots you need to be in, all right? Crude oil, which is massively overvalued right now, despite the fact that we've seen it fall the last couple of days, it's not going to last, okay? Could it fall further? Absolutely, but it's not going to last. I mean, you can expect them to prop it up. Tankers getting attacked, refinery fires, bombings, pipelines getting, disrupted, whatever they got to do. That's what they will do to keep crude propped up. Without crude being propped up, the stock market's going lower, much, much lower. Okay, you're not supposed to know that. The lifeblood of the military-industrial complex is crude oil. The lifeblood of this market is crude oil, period. Okay, it props up the entire energy sector and the financial sector. Why? The investment banks are leveraged beyond their eyeballs in crude oil. You're not supposed to know that either. You're not supposed to know it, but they are. Okay, so the mechanism is in place here, and they won't lose. So you can expect more fakery and crime to occur. Anyway, so a lot of stuff going on here today. In summary, we got a piece of economic news today that knocked my socks off. Way worse than even I expected. I expected this number to be bad. Well, I didn't expect it to be this bad. Anyway, all right, people, look, that's pretty much it for now. I'll keep all of you on top of this. As always, please share this video. Get it out there. Hit that thumbs up down here. Please post this video, all my videos, to your social networks. Talk about these things. Let's start to wake up the zombies, okay? Because they don't know what's going on. What did we find out yesterday real quick? They're borrowing again beyond their eyeballs just to claw themselves up. This is not the way to do it. Personal debt, household debt surging at a record pace, and it's not going to stop here. They're creating slaves on an epic scale, slaves to the central banks of not just the United States, of the world. And that's what this is all about. It's completely, it's the most twisted environment I think you can't imagine if you were watching a science fiction movie. It's an impossibility. All right, look, this guy here, like I said, loves you a lot. Please, please, please share this video, and I will see all of you at the end of the day. I'm looking forward to it.